At 7:47 this morning, I received a phone call that stopped me cold. A federal agent I've worked with for over 20 years had a single message. It's over. We found everything. Behind me on this desk sits a seizure inventory document that federal prosecutors will be studying for the next decade. And on page 4, buried beneath standard asset listings, is a single line that changes everything we thought we knew about one of America's most famous financial empires. But here's the part the major networks are already getting wrong. This isn't a tax story. This is the story of how a man convinced banks, investors, the American public, and even his own inner circle that he was worth billions, while the actual numbers told a completely different story. A story of forged documents, hidden compartments, terrified witnesses, and a financial house of cards that federal agents spent 4 years waiting to collapse. I'm James Walker. I spent 28 years as a federal prosecutor in the Southern District of New York. I've worked on financial crime cases involving some of the most sophisticated fraudsters this country has ever produced. And I'm telling you right now, I have never seen a seizure package assembled with this level of documented evidence. What happened on that tarmac this morning wasn't a collection action. It was the end of a very long hunt. If you want to follow every development in this case as it unfolds, and believe me, this story is far from over, hit subscribe right now, because what I'm about to walk you through is only the beginning. Let's go back to where this actually started. Not 4 years ago, not with a routine audit. It started with a number that made no sense. IRS Revenue Agent Sarah Chen, a 16-year veteran of complex financial investigations, pulled an audit file in the spring of 2021 and found herself staring at a tax return that had one catastrophic flaw. The subject reported $94,000 in personal income, standard deductions, modest lifestyle on paper. But cross-referencing against third-party insurance disclosures, property filings, and aircraft registration records told a completely different story. The insurance premium alone on the Boeing 757, registered to a Delaware LLC, traced back to this taxpayer, exceeded $340,000 annually. You cannot spend $340,000 insuring a private jet you use personally and report $94,000 in income. The math is not possible. And Sarah Chen, to her enormous credit, did not file it away. She made a phone call. Within 72 hours, the case had been elevated. Within 2 weeks, it had a dedicated team. And within 30 days, that team had identified something that transformed a civil tax matter into a federal criminal investigation. The Boeing 757, tail number cross-referenced across 3 separate legal databases, was simultaneously claimed as an asset by a Delaware C corporation for tax depreciation purposes, a Nevada LLC for liability protection purposes, and a Bermuda-registered trust for estate planning purposes. 3 entities, 1 aircraft, each claiming full legal ownership, each filing documentation to support that claim. This wasn't aggressive tax planning. Revenue Officer James Whitfield, who was assigned as lead collection officer in March 2022, described it in his internal case notes that are now part of the federal evidentiary record, as the most deliberately constructed ownership obfuscation I have encountered in 19 years of collection work. He wasn't exaggerating. What Whitfield found next was worse. Digging into the financial architecture behind these entities, he discovered 14 separate bank accounts across 7 Manhattan financial institutions, all controlled by shell corporations sharing a single registered address, a mailbox, in a strip mall in Queens. The total liquid balance across all 14 accounts belonging to a man publicly celebrated as a billionaire? $612,000. Not $612 million. $612,000. That's less than the monthly fuel cost of the aircraft he claimed to own 3 different ways. The supposed empire had no money in it, but it had enormous, carefully maintained debt. And that debt was moving in a pattern that forensic accountants would later describe as a closed-loop illusion of solvency. Money borrowed from Entity A was transferred to Entity B to cover Entity B's obligations to Entity C, which then recycled payments back to Entity A to create the appearance of operating revenue. Round and round, year after year. For at least 7 consecutive fiscal years, the entire enterprise had operated at a net loss. Every jet flight, every property, every public display of wealth, funded entirely by a debt merry-go-round that required constant new borrowing to sustain itself. And then, in January 2023, everything broke open. Her name was Patricia Warren. She had been the organization's senior internal accountant for nearly 7 years. She had been fired 4 months earlier, officially for performance issues. Unofficially, because she had submitted an internal memo questioning the accuracy of documents being prepared for a new loan application. Patricia didn't call a lawyer first. She called Agent Chen directly. And when they met, at a diner in White Plains, not a downtown coffee shop, because Patricia had insisted on somewhere no one would recognize her, she came with something federal investigators had not expected. She came with proof, not just testimony, not just recollections. Physical evidence she had been quietly assembling for over 2 years, stored in a safety deposit box in a bank branch, registered in her maiden name, in a state she no longer lived in. What was inside that box would later be described by Assistant U.S. Attorney Michael Torres as among the most comprehensive insider evidence packages I have encountered in 17 years of federal prosecution. There were internal financial statements, the real ones, not the versions sent to lenders, showing actual cash flow. There were loan applications submitted to 4 different major financial institutions, each one containing asset valuations Patricia could prove had been manually inflated. She had watched it happen. She had photographs taken on her personal phone through a cracked office door of a supervisor using correction fluid on a printed bank statement, allowing it to dry, typing new numbers directly onto the altered document, and running it through a high-resolution scanner to produce a clean, seemingly original record. But the single most explosive piece of evidence in Patricia's safety deposit box was a USB drive. On it, 23 audio recordings captured on her phone during internal financial planning meetings she attended as part of her job. In those recordings, senior figures in the organization discuss, casually, specifically, repeatedly, the mechanics of backdating loan agreements, inflating asset appraisals for lender submissions, and transferring the ownership of the aircraft to a Cook Islands trust in anticipation of federal collection action. One voice, captured clearly on recording 11, says the following: "Get the plane moved before the lien drops. Structure it through the island trust, and by the time they untangle the paperwork, this is somebody else's problem." That recording is now federal evidence. That voice will be identified. That statement will be played in a courtroom. By May 2023, federal investigators had search warrants for every known property. But word had leaked, almost certainly from someone inside the organization with knowledge of Patricia's cooperation. Within 72 hours of the warrant applications being filed under seal, the evidence destruction began. Industrial shredders ran continuously in the organization's main office building. IT contractors were brought in for emergency data migration, a process that a forensic review would later determine wiped approximately 340,000 files from internal servers. Paper records vanished from filing cabinets. Security system hard drives were replaced, with the originals removed and never recovered. The investigators were watching a cleanup operation in real time, and they made a decision. They would not raid the offices. They would go for the aircraft. Here is why that decision was brilliant. Private aircraft are mobile assets. They can be repositioned internationally within hours, placing evidence beyond the reach of domestic warrants. But more critically, the team had Patricia's recordings. They knew documents had been physically stored inside the Boeing 757 itself, not in the offices, not in the properties, in a custom-built compartment behind the aircraft's rear galley wall disguised as structural paneling. On October 14, 2023, federal agent Diana Reyes, conducting what was documented as a routine civil asset inspection, pressed her hand against the cabin wall panel during a walkthrough and noticed that the sound it produced when tapped was inconsistent with the surrounding panels. It was hollow. Behind the false panel, investigators discovered a fireproof compartment containing a locked document case. Inside that case, 400-plus pages of financial records, a handwritten transaction ledger spanning 8 years of actual organizational cash flow, and the USB backup of Patricia's original drive, apparently kept as the organization's own insurance policy. The net worth calculation, performed by forensic accountants after reviewing the full evidentiary record, produced a number that no one in the public had ever seen attached to this name. Negative $134 million. Not a billionaire operating at reduced capacity, not a wealthy man facing a temporary liquidity crisis, a man who had been insolvent for nearly a decade, borrowing constantly to project an image of wealth that existed nowhere except in fraudulent documents and public perception. This morning's seizure of the Boeing 757 was not a collection action. The aircraft's value does not come close to satisfying the outstanding federal tax liability, which has now compounded to over $18 million. The IRS did not chain that landing gear to recover money. They chained it to preserve evidence of bank fraud, wire fraud, securities fraud, insurance fraud, and a conspiracy to obstruct federal collection that was being actively executed as recently as 48 hours ago. What happens from here is federal prosecution territory, not collection territory. The grand jury that has been seated in the Southern District of New York has been reviewing this evidence package since February. Multiple individuals connected to this organization have already received target letters, the formal notification from federal prosecutors that you are the subject, not merely a witness, of a criminal investigation. The aircraft sits under federal guard on that tarmac tonight. The documents are in an evidence facility. The recordings are transcribed, the ledger is analyzed, the mathematics are irrefutable. I have stood in front of federal juries with cases I was confident in. I have also watched those cases produce unexpected outcomes when wealth, political connection, and an unlimited legal defense budget entered the equation. So I will not tell you that consequences are guaranteed. What I will tell you is this: the evidence in this case is not circumstantial. It is not technical. It is documented, recorded, photographed, and corroborated by a witness who kept receipts for 2 years because she understood exactly what she was watching. The question this case now forces America to answer is not whether crimes were committed. The question is whether we have built a justice system that applies equally to a man with a $20 million jet and a man with a $612,000 bank balance pretending to be worth billions. I've spent 28 years believing the answer is yes. This case is going to test that belief in front of the entire country. If you want to be here when it does, subscribe. Drop your verdict in the comments right now. Does this man face criminal charges, or does the legal machine find a way out? I read every single one. And share this with someone who still thinks financial crime is a victimless offense, because the banks defrauded here passed those losses directly to ordinary account holders. This story is not over. It is just getting started.